touch upon, given that, come 22nd, we're going to have the GST rate rationalization. So let's try and get a color on the economy. What exactly is the picture on ground, and whether or not come 22nd it's going to magically improve and retrieve itself or not. Who better than L&T Finance to actually throw color on all of that and more, of course. We'll talk about their company too. And joining me right now in the studio is Sudipta Roy, the MD and CEO at L&T Finance. We also have Sachinn Joshi, the CFO at L&T Finance, right here with me in the studios. Sudipta, Sachinn, both of you, thank you so much for your time and joining us today on ET Now. Sudipta, if I could start off with you, because if you talk about BFSI as a sector, that was just such a pain point for many quarters. There was that stress in credit growth, especially in the unsecured lending. Is the GST rationalization the answer, or are things improving as it is on ground?
Thanks, Aisha, for the time. And on your question, I think even before the GST cut came, things had been on the pathway to mend, especially on the unsecured lending space. As you are aware that the last financial year, we had a little bit of an asset quality issue on the personal loan side, and which actually saw the Reserve Bank of India coming and putting some curbs and guidelines on unsecured lending. Microfinance industry has had an asset quality cycle, and industries that have adjacencies to microfinance, for example, two-wheelers, etc., also had a little bit of small delinquency uptake. As we sit in almost the fag end of the year, we have one more quarter to go for the calendar year, we see things improving quite fast, especially on the microfinance side. We have been reasonably surprised by the sharp uptick of demand in the last 2 months. Collections efficiencies have been secularly improving across all geographies, especially in microfinance. In personal loans, things have been improving quite well, and we see disbursements across the industry coming up. Our disbursements also has been very strong, and this quarter we have seen strong growth in personal loans disbursements as well. As regards the GST cut, I think the impact would be felt far more, in a palpable way in the, the auto and the wheel segment, especially if you look at tractors, for example, of which we are one of the largest player in the industry. The GST headline GST has gone from 18% to 5%, which will obviously make the tractors more affordable. So we are looking at a major jump in tractor volumes in this festive period. Two-wheelers will see a good growth, and obviously the entire auto segment will see a good growth. So overall, I think the festive period will bring in a lot of cheer for the BFSI industry on the back of the GST cuts, and we are hoping for a very good H2 ahead.
Okay, fingers crossed on that. Sachinn, what's your reading on the numbers like? Because, like I was just saying, there was margin pressure, there was weak loan growth, elevated credit costs. Is the asset quality stress now finally lifting? Are the numbers totaling up to that?
I think, thank you for giving me the opportunity. If you look at big picture, the new RBI governor, as soon as he, came in, you saw growth being talked about. Very clearly, the kind of liquidity that is being maintained by RBI is close to 3 trillion in the system. That, along with the rate cut cycle, which has now started off, plus the GST gains, which will, Sudipta just mentioned about it. I think looking at the whole piece, in spite of whatever is being talked about on the tariff front, I think there is enough room for growth. We have just got out of the microfinance cycle, maybe a couple of months here and there. Especially L&T Finance should be out of it by September, October. And H2, we expect it to be really bumper. H2 will be very good in terms of disbursement growth, overall book growth, and especially the businesses that we are in. We have had taken certain steps when it comes to two-wheeler financing, personal finance, tractor finance. All those things are really coming to an end in terms of the actions taken. And now I think it's going to be a growth period. So H2, we are very bullish on in terms of the overall growth. For the full financial year, we see the growth about 20 to 22% for the financial year FY26. First half, first quarter, we have shown 18% growth, both on disbursements as well as book. The book growth year on year may not really see a significant growth because last 4 quarters have been difficult. But quarter on quarter, clearly a 5% growth is what we are targeting.
That's great. Sudipta, I almost saw a twinkle in your eye talking about the farm loan segment and how you're hoping for a recovery there. Tell me a little bit about Project Cyclops. You implemented that in August, right?
Actually, we implemented it in June of last year.
Okay, June of last year. Yeah. Okay. So what is it all about? And what is it that it's going to bring on the table for you?
Yeah, so if you see, Cyclops it's actually a software that we build in-house. Right, our engineers built it, and it goes on the basic premise that when you underwrite these days, right, if you have to do holistic and what I call 360-degree underwriting, then going and looking at the credit bureau records is not enough. So what we do in Cyclops is that we look at the credit bureau records, we pull the bank account through the account aggregator, and then what we look at is that we look at a little bit of alternate data also. And what we do is that the machine is able to do it in one single pass. So what it happens is that, when a customer comes and applies for a loan, I first go and pull the bureau, then I pull the account aggregator, then I pull the alternate data. I triangulate all these signals together and then come to a far more informed credit decision. Why it is so difficult to do? Because if you are going and pulling data from 7-8 disparate sources, bringing it all within a short period of time and giving a response to the field agent who is standing there with his tablet trying to do the entire application process is very, very critical. And that's what our engineers got to do. And the actual results have been pretty liberating for us, actually. We implemented it in June last year for two-wheeler business. And in the two-wheeler business, it has been in operation for about 14 months now. We implemented in tractors early this year. And now we have implemented fully in our SME business. If I were to talk about our headline, sort of portfolio bounce rates, especially in the two-wheeler business, between the Cyclops portfolio and the non-Cyclops portfolio, there is a difference of over 12 to 13% in headline bounce rate. So it cuts away, so much of what I call the questionable credit. And it has actually also helped us to maintain volumes because we were also identified something which we call undiscovered prime. A customer who is coming in, he might be a new to credit, but he is really an undiscovered prime customer because he's first to credit. So the machine does both ways. It cuts away the questionable credit, but also identified the good credit, but might be new to credit. Together with this, our volumes really didn't fall that much because, original expectations were that volume will fall. What it has done away is that cut away risk very, very effectively while maintaining our volumes, right? And that's been very, very successful for us. We're in the version 3 of the machine now, and our engineers have upgraded the machine. When we launched the machine, we could do 100 transactions per second. Now we can do 1400 transactions per second. So overall, it's an evolving tool, and we'll continue to improve on it.
But is there more such tech foray, if I can call it that?
Yeah.
Because you've also partnered with Google Pay, right? To try and expand onto your digital loans.
Yes. So, and if I were to sort of take 2 minutes to explain our tech philosophy, what we believe within L&T Finance, and we are in the middle of this massive tech transformation, on large retail portfolios, especially with the tools available today, it is possible for machines and algorithms to do things far more effectively than human beings. Humans have to step in when you have to look at or give decision or a subjective interpretation of something. But brute force computing or brute force decision making is done better by machines. So we built Cyclops. Pari passu Cyclops, we are building probably the country's first automated portfolio management engine, which we call Nostradamus, right? Which is basically monitoring a portfolio automatically to see signs of stress. Typically, what happens is that, in Indian financial services, in my experience, I've seen that typically you tend to identify stresses in portfolios after the event has happened, right? The real holy grail would be to identify the event before it happens. And Nostradamus actually is designed to do that, sort of identify the hotspots before it has happened. So that is
true to his name, right?
Yeah,
Predicted
correct. So that is why we named it Nostradamus.
Nostradamus, yeah.
And the Google Pay or the other is also a large part of our digitization strategy, where we have partnered with what we call the big techs, which is basically now we have live partnerships with Amazon. We are the only provider on Amazon we are live on Cred, we're live on PhonePe, as well as we are live on Google Pay. We primarily use these relationships for personal loans origination, and the scale up of personal loans origination through this platforms have been very, very fast and very, very rapid while maintaining credit quality. You will see over a period of time, over the next couple of quarters, our tech initiatives will continue. And whatever we are doing on tech, be it on the large partnership side or core tech, that means our in-house to L&T Finance, will continue to sort of grow, and will come and announce to the market as and when we are ready.
Sachinn, let me talk about, what the granular picture is like, because Karnataka was one region where you did have collection efficiency challenges. Disbursements were slow.
Yes.
What is the situation right now? Have things settled down?
Situation is improving. Of course, Karnataka, the issue started off with the ordinance coming up, and we saw almost 300 basis point plus kind of reduction in the collection efficiencies. It went down to 96.3. Very clearly, this ordinance was not meant for players like us, right? The NBFCs registered. However, the ordinance, the advantage was taken by customers. It was the issue not of ability to pay, but intent to pay. And very clearly, over a period of time, as the customers have started realizing that the bureau records will turn bad, they have started coming back, and the collection efficiencies have improved substantially. We are back to about 99.05% now at the end of August. Very clearly, 99% is one, a key number for us. On an aggregate basis, including Karnataka, the end of August, we are about close to 99.5, which means we are coming very close to normalcy. The earlier normalcy used to be 99.8, but with all these challenges that the whole industry has gone through, I think the new normal would be about 99.65, 99.7. We are slowly and steadily inching up to that number now. So clearly the challenges are being left behind. The collection efficiency improvement also decides what should be the disbursements. So our disbursements, which went to as low as 1400 per month, 1400 to 1450 per month during the whole crisis period, has already, it came to about 1900 per month last quarter. And in fact, this month we have closed with the second highest ever disbursement. It's close to 2000 crore plus is what we have disbursed in the month of August. So we see very clearly things normalizing, and it's also giving us the opportunity to come back to normal and accelerate the disbursements as well. So I think it's a good news for the whole industry.
Well, absolutely. And the market was a little worried about, the situation in Karnataka.
Yeah.
But Sudipta, coming back to you, and we were chatting about two-wheeler, what the GST rationalization could really do to the segment. Do you sense that there would be increased lending when it comes to two-wheelers specifically?
Yeah, actually, because you see, if the two-wheeler financing segment cannot grow faster than the market, right? And obviously, our growth is hamstrung by to the extent that the two-wheeler market grows itself. So I do believe that the GST cut will increase affordability in the two-wheeler segment, especially in the sub 1,50,000 rupees value two-wheeler segment, which constitutes the bulk of the two-wheeler offtake. So we do believe that there will be a reasonable amount of uptake. Now, percentages, I don't want to hazard a guess, but I think safely we can assume that the uptake will be upwards of 20-25% uptake over the previous quarter. So that's what we are looking at. And I do believe that the entire industry will take benefit of that, And financing is a very, very key component of the two-wheeler business. Any auto business, financing is a very, very key component. And over the last quarter, we have been working on forging deeper relationships with most of the OEMs, especially when it comes to the financing side, and some strategic partnerships as well on that. So we are hopeful that the GST cut and the festive period that is coming in will give a great fillip to the two-wheeler offtake, and on the back of that, our two-wheeler disbursements will also grow.
I want to talk about this new, or rather relatively newer segment that you've gotten into, gold loans.
Yes.
Right? What are the prospects of it, given that this is such a strategic investment for you, and the fact that gold prices are climbing a daily high and a record high pretty much on a daily basis? How is that impacting the segment?
See, our decision to enter the gold loans segment was driven by a couple of key considerations.
Sure.
We are one of the largest players in microfinance in the country, right? And when we looked at our data, we figured out that our customers have borrowed over 16,000 crores worth of gold loans. Now we say that we have here a captive base that is already borrowing this particular asset class. Probably we should take part in it. It took us for some time to sort of firm up the strategy. We got a very good asset in terms of the Paul Merchants Finance Limited gold loans business that we acquired, and we subsumed the business in only 4 months flat, and it's about 130 branches we got, primarily towards the northern part of the country, which is in common parlance, it is a non-traditional gold loan area. Gold loan area is normally considered to be very, very considered in south. So that gave us a good foothold and a toehold in that business, and cut our time to scale by almost 24 months. So that is the reason, we sort of did the acquisition. The other thing is that gold loans is a secured asset product which has relatively high yields and high ROAs. So in our journey to sort of balance the asset profile of our business and move a little more towards secured, this was a very, very strategic decision for us. We'll be expanding this business quite strongly. And as you know, gold prices have been going up. The gold holding in the Indian households is one of the highest in the world. And Reserve Bank of India now with its omnibus gold loan guidelines has actually there were certain interpretative gray areas. That has been taken away, and now everything is in black and white. So I do believe that the industry will grow very strongly. And we intend to put in about anywhere between 150 to 200 gold loans branches over the rest of the period of the year. So the growth for us will be quite steep, and we'll scale this up. And all the gold loan branches that we put, we are calling them as Sampurna branches. That means we'll not only do gold loans from there, but we'll do some other products from there. Yeah. So that, the branch becomes overall a holistic branch rather than a standalone gold loan branch.
Makes sense. So, Sachinn, you've got 2 upgrades, right? One from S&P, the other one from Fitch, both along the sovereign rating of the country. How does this really benefit your company in terms of, cost of borrowing, further lending, etc.?
Sure. So the international rating, this is the first time when, we actually approached the international rating agencies. We got the ratings originally in the month of July. S&P actually upgraded the country ratings. And what you saw in the month of August, the news was about that upgrade. And NBFCs are restricted to country rating, so they cannot be better than the country rating. And hence, when the upgrade was given to India rating, we got an upgrade as well. We are now BBB. It used to be positive. Now it is neutral. Now, Fitch has already given us the same in the month of July. The purpose of doing this exercise was that our overall balance sheet size right now, AUM is about 1 lakh crore plus. This is the right time to go for diversification. We have been depending on external commercial borrowings. There is a limit of 750 million prescribed by RBI. The ratings, international ratings, give us the opportunity now to go to the international capital markets. We will keep this rating. It's not necessary that we go to the international markets immediately. We will be opportunistic, but it now opens up one full, wide window for us to go overseas and borrow if the external borrowings are cheaper on a completely swapped basis, because we completely hedge the borrowings whenever they are made, because our board does not permit us to keep exchange. They don't allow us to take any exchange risk. So on a completely hedged basis, if the overall costs are going to be equal to or lower than the domestic borrowings, then that would be a preferred way to borrow. That's where we are at this point of time.
So Sudipta, lastly, you've almost reached your target of Lakshya 2026. What's the next Lakshya? Boom like Boomrah? Is it?
Yeah, no. Yeah, and Bumrah is our brand ambassador right now, and we are just running a two-wheeler campaign with Bumrah.
Yes.
I think Lakshya 26 has been pretty transformative for the company. We had taken 4 key goals, and more or less we have hit most of those goals, right? And we have hit those goals ahead of time. As you know, L&T Group does this 5-year Lakshya plans, and for all their ICs. So we are also partaking in the Lakshya 31 plan. So we've already started working on Lakshya 31 plan. Right now, probably I'm not, don't have the freedom to talk about Lakshya 31, which we'll talk about early next year. But rest be assured that the organization is having a lot of work ahead to plan for the Lakshya 31 plan, and Lakshya 31 plan will be an even more transformative period for L&T Finance, right? Where we want to position ourselves as a risk-first, technology-first, strong growth-oriented, diversified financial services player. So that is what our objective for Lakshya 31 will be. And I think one of the cornerstones of Lakshya 31 will be strong growth with very strong risk management and delivering the returns that the markets would probably love.
Great. All the best, both of you. And thank you so much, Sudipta and Sachinn.